Well, the Federal Reserve is widely expected to hike interest rates again this week.
That's right. This move would be the central bank's latest to combat high inflation. Experts anticipate the Federal Reserve will announce a hike of 75 basis points Wednesday for the fourth consecutive time. This would be the sixth overall rate increase this year.
Joining us now is Jon Hilsenrath. He is a senior writer for the Wall Street Journal. He is also the author of the forthcoming book about the U.S. Treasury Secretary. It's entitled Yellen, the trailblazing economist who navigated an era of upheaval. I don't know why I can't say that word. Jon,
that's
thank
what
you.
We've got.
Thank you for joining us. First and foremost, why are experts anticipating another 75 basis point rate hike on Wednesday? And just explain, what that actually means.
Well, so two things. The main reason why the Fed is expected to do it is because inflation is so high. And when inflation is very high, what that means is that there's a lot of demand in the economy. People are spending a lot of money, and there's not enough supply to meet that demand, and that pushes prices up. What the Fed does is it raises interest rates to slow down demand. That 75 basis points is 3/4 of a percentage point. So, think about your mortgage rate. Right now, they've moved up over 7% for 30-year mortgages. Think about a 3/4 percentage point increase on your mortgage rate or a car loan. It really is sinking its teeth into the economy right now.
Yeah, you know what? When I hear that, I think it's too bad the Fed can't target their interest rate hikes and say, everything but mortgages will go up. Everything,
that's a great idea.
Everything but your credit card interest rate will go up. Right?
The Tanya Rivero economy.
I'm going to join the Fed.
Get the other guy. Don't get me wrong. But that's actually what they say about the Fed is that what they have is a very blunt instrument to affect the economy because it affects everybody. It affects all the supply and all of the demand. And that's why people are now talking about the risk of a recession next year. Because of the inflation that we got this year, the Fed is slowing demand, and that might cause a recession next year.
It's too bad they can't make that weapon a little less blunt, a little more refined. All right, so we do know 5 interest rate hikes have been imposed by the Fed since March, and yet we're seeing Americans continue to struggle, though, with record high costs.
Yeah.
Are these increases making the impact on inflation the Fed is hoping they will have?
Well, that's been the big surprise, and you've seen this surprise go back and forth every day in the minds of investors in the stock market. So this summer, a lot of investors thought that we were seeing progress on inflation. Gasoline prices were coming down, airfares were coming down, hotel rates were coming down. But then as we got into the fall, this progress that we saw started to slow. And that's why the Fed is kind of back at the job this week, raising interest rates yet again. So I would say, to your question, we saw some progress, but it hasn't been convincing enough. And the Fed is going to keep doing this until they're convinced that they've made progress on inflation, because we don't want to go back to the 1970s where this kind of thing stuck around for years and years and years. And eventually you needed a really bad recession to put the brakes on it.
Yeah, but to your point, how much of an increase, how much of a rate hike can we absorb? Like, there's got to be a ceiling, right?
Well, so, this gets to the wizardry of the Federal Reserve, and it's why it's like this kind of strange institution that investors are so obsessed about in Washington, because the answer to your question is we don't know. They're constantly trying to strike a balance between keeping inflation at their target of 2% a year and not wrecking the economy in the process. So, in the previous decade, inflation was very low, and they kept interest rates very low. Now the story has changed, and they've got to keep testing the waters. We see in the numbers. You see at the grocery store, you'll know when it's coming down and when it's continuing to rise.
All right, Jon Hilsenrath, thank you so much for your insight.
Sure thing.